In this segment, we are going to discuss managing cost. The goal of any business is to generate profits. Managers have to manage costs to generate profits. An understanding of the fundamental business model, which is revenues minus cost minus expense minus taxes equals to profits, helps managers in managing cost. The revenues, cost, expenses are recorded by the financial accountants in the income statement. The income statement is prepared quarterly and annually by the financial accountants. The role of the financial accountant in the organization is to collect, organize, record financial data based on the accounting principles and guidelines. Financial accountants are focused on sharing accurate and timely data with investors, managers, lenders, and regulating agencies. They also share with other stakeholders. Managing cost is the responsibility of the management accountants. They use financial data and information created by the financial accountant and prepare forecasted data to formulate a strategy for managing cost. They operate inside the organization and do not report or share data outside of the organization. Management accountants are concerned with the top portion of the income statement, cost of goods sold or cost of goods manufactured in the manufacturing organization, or cost of services in service organization. Their responsibility is to manage the three components of the cost of goods manufactured or cost of goods sold. The three components are direct labor, direct material, and overhead. Both financial and management accountants work in the finance department under the leadership of CFO. The controller in the finance department oversees accounting function, and the treasurer is involved in raising funds, investment decisions, dealing with financial institution, investor relations, and market. Managing cost is critical for the success of the company in both product and service market. Cost information helps the managers in formulating the strategy to compete in the marketplace. For example, Walmart uses a low price strategy to compete in the marketplace. If the company cannot manage costs, they cannot compete in the low price retail marketplace. Company has to continuously work hard to manage costs to be competitive and profitable in the marketplace. If the company is profitable and has positive cash flows, it will also be successful in creating value for the shareholders in the stock market. The first step in managing cost is to understand cost management concept. Cost is giving up some of your resources to solve a problem or achieve satisfaction. For example, if you're hungry, problem is hunger. Let's assume that you spend $8 for hamburger, fries, and drink to solve the hunger problem. Cost incurred is $8 to solve your problem or satisfy your hunger. In business, you should be familiar with product cost, period cost, manufacturing cost, service cost. The cost is recorded based on the type of production process involved in the business. The businesses are classified by the nature of the business, such as job shop, batch processing facility, assembly line operations, or continuous flow organization for studying cost and managing cost. An example of job shop is your local sheet metal shop. Printing services is a good example of batch processing. Automobile manufacturing plant is an assembly operation. A paper mill is a continuous flow organization. Product costs are the manufacturing cost of the product and are carried as inventories for the next period. For example, the cost of manufacturing the table is $100 and the company produced 100 tables. The total cost of manufacturing will be $10,000. The company sold 80 tables by the end of the year. The cost of 20 tables that were not sold will be carried as inventories for the next year. The $2,000 cost will be transferred as inventories to the next year because it is a product cost. The expenses that occur periodically, such as selling and administrative expenses and any other period expenses, expires as the period ends. Most significant costs that management accountants are concerned about is the manufacturing or service cost. Manufacturing cost includes direct labor, direct material, and manufacturing overhead. Direct labor is the labor used for production of the product, and it is traceable. The direct material is the actual material used for the production of the product, and it is traceable. The manufacturing overhead includes indirect labor, materials, and other costs such as depreciation of the property, insurance, and other costs. The other costs that manager must be familiar with are fixed cost and variable cost. Fixed cost does not change with the level of business activity, but total variable cost will change with the activity level. Let's assume that you own a small restaurant. Fixed cost is the lease of the building, depreciation of the kitchen equipment and the furniture, salaries of the manager, and other. The total fixed cost will not change if the level of activity goes from 10 customers to 100 customers, because it's not related to the level of the activity of the business. The variable cost is the cost of the food supplies needed to serve to the customers. The total variable cost will change if the level of activity goes up from 10 customers to 100 customers. More food you serve, more food supplies you need to prepare the food. Cost management is a critical function in the organization, and it helps the management in creating competitive advantage in the marketplace. Thank you for listening to the podcast.